Hey everyone, how's it going? My name is Richard Moglen, and welcome back to our stock market outlook video sponsored by Margaret Smith. And right now, with the NASDAQ 100 sitting right at its 200-day moving average, and also the S&P 500 at a critical level as well. Let me bring up that chart right here, just below its 50-day moving average. I think we're at a turning point and a very critical spot with the direction of the general market. So bringing back the NASDAQ here, this 200-day moving average hasn't really been tested in quite a while. Going back to a weekly, you can see we've been in a sustained uptrend really since the March 2020 correction, and before that, the 2018 correction as well. At this point, the longer term trend indicator, the 40-week moving average, is still rising, but we are getting pretty close to undercutting that key level, and it's really important that we hold it and also hold last week's lows, and maybe start to kind of base out for a few weeks and restart an uptrend. That would give some time for bases to form and leading names and kind of group participation to increase. I think that would be constructive, but I really do want to see us hold this longer term trend indicator, this moving average. And I think it's also worth mentioning, looking at the weekly chart, that we are making relative strength new lows before price. You can see that this lines up with this prior low right here, and you can see the relative strength line versus the S&P 500 is making new lows while price has not yet, and that is a sign of relative weakness with the NASDAQ, which clearly is kind of the lagging index when it comes to comparing it to the S&P 500. The S&P 500 is holding up a little bit better than the tech stocks in general. And bringing it back over to a daily chart, this 40-week line translates over to the 200-day moving average. We had two nice hammer candles here, so definitely want to see us hold these lows and ideally start to build out the right-hand side of this base, maybe go sideways, then rally upwards. But you also have to recognize that even if we do form a tight range, we can obviously break back towards the downside, and that would be a huge negative, especially if it's on high volume. And don't just blindly buy the dip in your favorite names because you think they've fallen too far, or because it's worked prior during these corrections, and here prior during this uptrend. Because right now the trend is kind of changing. We see the potential for rate hikes and kind of a change in the Fed's policy with QE. And those can really mark the starts of extensive bear markets and corrections. So be aware, be on your toes, and have a plan for whatever can happen. So moving on, let's also talk about a few different indexes that give a little bit more of a perspective. So starting with the IWM, this will cover the small caps here. And this is also in a downtrend below a declining 50 SMA, 200-day moving average, as well as 21 EMA. So basically it's trending in the wrong direction, but we're holding this prior low for the time being. So definitely want to see that stick. And we do have a hammer candle Friday. We want to see that continue and fall through to the upside. But once again, it'd be a big negative if we undercut that and undercut the lows of this longer term consolidation period. And we'll just have to wait and see what happens. And looking at small cap growth in general, let's take a look at this chart, the IWO. This is a little bit weaker than IWM. We're undercutting all these lows. So once again, not a great look. And this looks like the left-hand side of a base. So it really would need a lot of time to form out and kind of form a bottoming process. So don't rush into things when we are in a downtrend. And basically one-day pops within the context of a declining 21 EMA, 50 SMA, 200 SMA are very suspect, and we'll have to just wait and see what happens and really see bases form out and ideas to start to move up the right-hand sides of their bases. Also taking a look at the FFTY, this gives another sense of growth stocks, once again below a declining 21 EMA and 50 SMA, so this just isn't an easy dollar environment like we had back in this area when we're rallying above a rising 21 EMA and rising 50 SMA. Then we had chop, and now we're just experienced more chop and now a downtrend since this failed breakout. So once again in a downtrend, and we'll just have to see where this goes from here. We are holding above these lows for the time being. We undercut that and rallied, but we'll have to see where we go from here, whether we base out, move up, or break down and break these lows. Lastly, let's also take a look at a few other key names. It's always good to look at kind of the leaders in the growth space. Tesla, I think, provides a great indicator of basically institutional risk appetite. Right now, just kind of chopping sideways. It is holding above 1,000 for the time being. I love to see it stay above that level and stay above this low right here and just form out this base, tighten up on the right-hand side, and ideally get back above that 50 SMA and start to move towards all-time highs. I think that would be great. NVIDIA as well in the semi space, because this is a potential leadership group, is basically trying to form out a double bottom here, but it hasn't rallied and gone back above that 21 EMA And you also have this DTL that still signifies that we're in a downtrend for the time being. So I want to see it rally, get back above that 21 EMA and see that moving average curl up under price and start to act as support, and then see a pop through the 50 SMA and then get back above this intermediate pivot at around 313.30. So it still has a lot of work to do before it's ready. Some semi names look a lot better than this. If we bring up Qualcomm, this is showing relative strength, nice action, especially on this Friday, above a rising 21 EMA and rising 50 SMA. And I think this is definitely one to have your eyes on if we do see a nice kind of widespread rally in the general market. Also taking a look at a few other names. MU is another one holding up really well. This is also above a rising 21 EMA. You can see really just the relative strength, and you can see that in the relative strength line as well in a nice uptrend throughout this process. So try to identify these names kind of bucking the overall trend of the market and above their key moving averages, and make sure you're not kind of falling in love with names like Roku and Net and believing that they'll go up just because they trended nicely in 2020 or 2021 and made you money, because right now they're just objectively in downtrends below their key moving averages, and it's going to take a while to form out bottoms of bases and for these to potentially restart uptrends. And if you take a look at a chart of SQ, I think this is a great example. If you go to a weekly, you can see that after significant runs, these can go sideways and just base out for years and years. And really, instead of falling in love with these names and just trying to buy every single dip during these downtrends and just kind of having your money sit stagnantly during this basing process, you want to try to identify those leaders that could be the next big movers if an uptrend resumes once again. So right now we're seeing a lot of money flow into names like Ford, which is above all its rising key moving averages when the market is pulling back, as well as TM, Toyota. This is acting quite well. So look at these stocks and look at overall groups that are seeing money flow and holding up better than the rest of the market. Right now, XLE energy names, as well as small cap financials, banks as well. Those are seeing a lot of inflow, and those are just acting well and showing relative strength and are the leaders at this point, even as the market is pulling back. So if that's not your style, sit on the sidelines, have most of your portfolio in cash, and wait for those growth names, those growth groups to come back into favor. And that would just kind of allow you to preserve your mental capital as well as your financial capital, because you're not trying to buy into these downtrends when they most likely are not the bottom. Even a one-day pop, as you can see right here, even a 3-day move is likely just being sold into by institutions who establish their positions a lot lower and right now are net distributing stock. So please remember that and try to identify those new leaders that could be the big movers in the next cycle. So with that said, let's move on now and talk about a few stocks that could be leaders in the next coming uptrend, because right now they are showing relative strength, and we'll have to see how these trends develop and whether they will continue in the coming weeks and months. So first up, we've got AMR, not a super high growth stock here, but a really nice trend from these March lows. Nice rounded base here and definitely trending nicely above the key moving averages and make its way into price and RS new highs. Zim, nice breakout here, and actually had a whole write-up about a potential setup that you could have played last week. If you want to read that through, it's completely free. It'll be linked down below in the description, as well as popping up right now. LRCX, one of the semi names, holding up really well. Really good action on this Friday and pretty strong off the bottom here with some good volume here. Qualcomm also holding up really nicely above the rising 50-day moving average. Is definitely one of the better looking setups in growth space in this coming week. You've got a clear pivot right at around 191 here, and also, of course, the all-time high breakouts. FCX, a little gap down here, but decent reaction, holding that 10-day moving average, also trending above the rising 21 EMA. MP holding that rising 50 SMA. Tesla not really in that nice trend above a rising 10, 21, and 50 SMA, but I think it's important to keep an eye on, and I think it gives a good sense of the risk appetite of institutions. XLE, the whole kind of group, is acting really well. Look at that trend above the 10-day moving average. Definitely a little bit short-term extended, but this group has seen a lot of strength here, so you can run through these names and just kind of try to find those setups if you really want to trade these type of opportunities. OAS also acting well, most likely in that group. Ford, we mentioned, really nice trend above the 10-day moving average. Lucid, kind of negative action late last week, especially on this day right here, although not on huge volume, but I think it's important to keep in mind that I believe lockup expiration is the 19th, but please correct me in the comment section if I do have that date wrong. MU holding up really nicely, really good action on this day right here. Oops reversal on Friday. SIMO also really nice action. Undercut and reclaim of that 21 EMA on Friday. AA acting nicely as well. XLF, you've got a gap down on Friday, but overall it's been in a nice trend. I think that was because JPM gapped down on earnings. But in general, a lot of small cap banks have been acting really nicely. And lastly, we've got EDR, which is below a declining 21 EMA, but just kind of flat 21 EMA. And I like the overall base structure, although this is very choppy to trade. So overall, that's a few names that are kind of standing out to me as of this moment. Not really many steps I would want to trade. And right now I'm 100% in cash. So we'll have to see how things develop from here, whether we restart an uptrend and I can put on some test trades. So let me know any stocks that I missed that are holding up really nicely in the comment section below. Moving on, let's talk about a few previous leaders and just run through these very quickly. Most of them are in downtrends. SI looks like it's just kind of forming the bottom of a base. LC trying to base build here, also in a downtrend. AMD chopping around maybe a double bottom base here. HUT in a downtrend. Domo in a downtrend. Coinbase also in a downtrend, trying to find support after an undercut of this prior key level. ASAN also in a downtrend below a declining 21 and 50 SMA. EMPH downtrend, Dash downtrend. So all of these pretty much look very similar. A lot of them are broken and need a lot of time to kind of form out proper bases again and restart a potential uptrend if they do so in the coming weeks and months. So a lot of these, actually Bros doesn't look too bad, trying to find support near this key level around 44, 45 or so. So maybe because this is a recent IPO, this is definitely one to watch, but it is below the anchor VWAP from these highs. So we'll have to see whether it can kind of build into that and form a structure above that and start the right-hand side of a base. DDOG in a downtrend right at this moment. Net in a downtrend. Unity Software also in a downtrend near its 200-day moving average. So we'll have to see whether you can form out a bottom right here. UPSD also in a downtrend here. Netflix in a downtrend. Apps right at a pretty important anchor VWAP from the March lows, which is pretty interesting. But right now it is in a short-term downtrend. CrowdStrike also in a downtrend. Roku in a downtrend. Bill in a downtrend. SBT, Peloton, Affirm. All of these are just in downtrends at this moment. So these are going to need a lot of time. We're seeing a lot of distribution here, and to really form out a proper base, if we bring up, let's see, which is a good example of a base. Let's go back to SQ here. Bases take a while to form, and even when you think the bottom is in, you can see we had an undercut later on. So it's going to need a lot of time. A lot of these leaders that have run 200, 300, 400% in 2020 and 2021, it's going to take time for basically the supply and demand characteristics to be right for them to resume and break out towards all-time highs. So basically be mindful of that and don't fall in love with these names just because they made you money in the past. Don't be afraid to put your capital work elsewhere, or as of this moment, just because we are so choppy and the trend of the market is pretty unclear, don't be afraid to just be majority in cash and wait for the direction of the market to really make itself clear. So with that, let's move on over to a few different sorts of sentiment and cover that aspect of the market health. And now talking about sentiment, let's start with my Twitter surveys, and we're seeing a slight increase in bullishness from 25.8% now 30.7%, which is still pretty low. So at this moment, people are still pretty bearish here on Twitter. Looking at the name exposure index, we are declining from 89 to 74, but this is still reasonably high. I'd love to see this fall to the 50s once again. Looking at the put call ratio, this is still just kind of range bound here, not really showing a direction. I do want to see a quick spike here up to 1.15. And lastly, the bull versus bears pole is declining, but still above 40. I'd love to see an undercut of these prior levels. So at this point, not too much to say in terms of sentiment. Moving on to the IBD Big Picture article, the headline is Stock Market Bulls Fight Off Bear Attack. These groups lead the charts. Reading through, they discuss the strong action in the indexes on this Friday, how the growth stocks are flexing their muscles a little bit, although as we saw from the trends, the overall trend in the FFTY is still down, even though it was up for the week. And they also discuss the mixed luck for bank stocks down here, although they do highlight these industry groups, which is oil and gas, and also a few others mentioned here. And their overall take on the market is an uptrend under pressure with 3 distribution days on the S&P 500 and 1 on the NASDAQ. And here you've got some leaders up in volume and leaders down in volume. Lastly, we've got the Wishing Wealth GMI Signal, which is red since January 10th, and the GMI score on the this Thursday was only a 2 out of 6. So we're all taking everything into account. My current view is a market in correction. I think it really remains to be seen whether we rally from this point or we just kind of roll over and undercut those lows. But really, whatever you think about the market, it doesn't really matter. The market will do what it wants, and really be ready to pivot and have a list ready of leading groups and names to watch if we do kind of restart this uptrend. So computer data storage, semiconductors like Qualcomm, EVs, auto manufacturers like Ford, Lucid, Tesla. Watch those very carefully, as well as the oil and gas names as of this moment. So I hope you guys enjoyed this video. If you did, please go ahead and leave me a like down below and subscribe if you're new to the channel, and let me know your thoughts down below in the comment section, and I'll see you guys in future videos. Thanks.